have a couple of details to get straightened out here, but appreciate it. We'll jump straight into our orders of business, and I would call us to order and look for any bill introductions to come before the committee. Ms. Steele? And very quickly, Caroline Steele is the one who drew the straw to be my intern, so she has a few of the bills that I had heard before the committee. So welcome to committee. Yes.
Thank you. Good afternoon. Thank you, Mr. Chairman. First, I would like to introduce Bill RS number 2447. It is regarding the enactment of the Kansas Work and Save Program Act.
Thank you. Are there any questions? Representative Riley?
Thank you, Mr. Chair. Can we just have a one sentence or something explanation of this RS number?
We can. If I may, one of the things that has been brought to us was just a chance to have a program that would allow the government, possibly even within the Treasurer's office, to set up something not entirely different from a 529 plan that would allow a savings plan that a company could opt into to have a retirement plan if they did not want to set their own up. That would be a plug-and-play system. It would be very limited. I think the first one would just allow a Roth option just for somebody to get started saving. If they wanted to do planning, that wouldn't be offered, but it would be one way to possibly step into that. I'm sorry I didn't do a sentence. So, yeah, thank you. Representative Miller.
The principal purpose of an intern is to learn, right?
Absolutely.
Okay. No, it's not like that. This is actually a mistake that's made by seasoned veterans, but it's a bit of a pet peeve for me, and that is when people come in, they often say, I would like to introduce such and such a bill, when in fact, what you would like is you would like the committee to introduce the bill. You simply raise the subject, we decide. In this case, without objection, we decide whether or not the committee introduces the bill. And I bring that up, Mr. Chairman, only so that the record continues to be accurate, because it's not the person requesting it that's introducing it. And I'm picking on you so that those people that should know better learn. Thank you.
So would the correct language be, I would like the committee to introduce?
Would the reviser care to give us just a little bit, since it's actually the chair that told her what to say? So,
thank you, Mr. Chair. And actually, it's one of this reviser's pet peeves, and I try to remind gently my other chair that it's the individual would like to request for introduction by the committee. This whatever RS number.
so thank you for each of us. It would be, I would like to request for introduction by the committee, the insurance committee, RS number. Thank you both for that clarification. Representative Collins.
Thank you, Mr. Chair. But isn't she introducing the bill to the committee?
I will defer to the head nod of the reviser that she or we would be making the request to introduce the bill, and then the committee would actually accept or hit the action of introducing the bill.
Okay, thank you. I just wanted to let her know that someone's on her side.
Thank you, Representative Collins. I appreciate that. Are there further questions? And thanks for the correction to process. I might do that after bill introductions are finished, if that's the case. Thank you, Representative Smith. If there are no further questions, is there an objection? And without objection, we would request the introduction of the bill. Did I get that right? Close enough. I appreciate it.
Okay. We have a second bill that I would like to request for introduction by the committee, which is Bill RS number 2867. It is regarding the termination of the sweep from the Securities Fee Fund into the State General Fund.
Thank you. Are there questions, committee? Is there an objection? Without objection, we would request the bill for introduction.
Great. And thank you, Mr. Chairman. One last one we have here today. I would like to request for introduction by the committee, Bill RS number 2822. It updates the version of risk-based capital instructions in effect.
Thank you. Committee, are there questions? There are no questions. Is there an objection? Without objection, we will request the bill for introduction.
Thank you.
Yeah.
Learn from the best.
I am. Thank you. Ms. Steele is at KU and is in political science, and I'm excited to have her working with my office for this year. So look forward to her getting to know all of you as well. Thank you.
Pleasure to meet all of you.
Are there other bill introductions? Mr. Claudel.
I first must say I represent KCPR. I do not represent the Capers Board, of which I am an elected member of. KCPR would like to offer up two bills for consideration. The first one is 22 RS 2842, calls for a COLA for Capers, retirees and beneficiaries.
So the request, questions, Representative Miller.
And for the record, KCPR is?
Oh, Kansas Coalition of Public Retirees. Pardon me, sir.
Thank you. Other questions, committee? Is there an objection to the request for introduction? And without objection, request will be made.
Thank you very much. Second bill is an alternative bill or a second option bill. This is an index bill. Once again, COLA for Capers. Once again, presented by the Kansas Coalition of Public Retirees. The number on that is 22 RS 2843.
Are there any questions, committee? Is there an objection? Without objection, we will request the bill for introduction.
Are you good electronically, or would somebody like a copy of these?
I think we have that through the revisor's office.
Okay, very good.
So thank you.
Thank you very much.
Are there other bill introductions? Seeing none, thanks to everyone for their work through that. And Representative Smith, I believe you had something for the committee?
Thank you, Mr. Chair. These two bills that were just introduced is what I was going to ask you about. Some people have asked me, we haven't had a COLA for 25 years, and I was just going to ask, if Capers could afford that or whatever. So those bills will answer that question. Thank you, Mr. Chair.
So thank you. And yes, that would be our debate, is how we try and work that out. And I think there's been some question whether those bills would be here and dealing with the funded ratio of the trust fund, or in appropriations and looking at a way that they would be funded. I believe that the Board of Trustees had made a recommendation on a COLA and that it be funded, but we will hear from the board officially on that. And that might direct which body has the hearing. So thank you. With that, I think we will jump into our hearing for the day. And our hearing is on House Bill 2510, and we would begin with an overview and briefing from the revisor, Revisor Mall.
Thank you, Mr. Chair and members of the committee. House Bill 2510 amends KSA 40-2B06 and 40-2B07 relating to limitations on permissible investments made by Kansas domiciled life insurance companies investing in equity interests and preferred stock. Section 1 amends KSA 40-2B06 pertaining to investments in preferred stock. Under current law, a Kansas-sited life insurance company may invest up to 25% of its admitted assets in the preferred stocks of or stocks guaranteed by, from the bill directly, a corporation incorporated under the laws of the United States of America or of any state, district, insular, or territorial possession thereof, or of the Dominion of Canada or any province thereof. The life insurance company's admitted assets are based upon the company's last annual report as filed with the Commissioner or a more recent quarterly financial statement filed within 45 days of the end of the quarter to which the statement pertains. On the bill, subsections A through E are all requirements that current law places upon any potential investment made by such a Kansas-licensed life insurance company in the preferred stock of an American or Canadian corporation. House Bill 2510 would amend the statute by removing all of those requirements placed on such a potential investment. Section 2 amends KSA 40-2B07 pertaining to investments in equity interests. Again, under current law, a Kansas-licensed life insurance company may invest up to 15% of its admitted assets in the equity interests of an American or Canadian business entity. As with 40-2B06, the life insurance company's admitted assets are based upon the company's last annual report as filed with the Commissioner or a more recent quarterly financial report filed again within 45 days of the end of the quarter to which the statement pertains. Subsections A through G place requirements on any potential investment made by the life insurance company in such a business entity. House Bill 2510 increases the percentage of admitted assets allowed to be invested from 15 to 20%, and it would remove the requirements in subsections A through D. And an exemption to subsections B and D provided in subsection G has also been removed. Finally, 2 unlawful delegations of authority were in the bill, one in each statute. And essentially, the crux of an unlawful delegation of legislative authority is when that the legislature cannot delegate its legislative powers to other entities. So both statutes in the bill stated that the filing of a financial report with the Commissioner would be made on a form prescribed by the National Association of Insurance Commissioners. And here the issue is that the National Association of Insurance Commissioners can't tell the state anything because they have nothing to do with us. So I corrected the issue by amending the language to read that the filing needed to be made in the form and manner prescribed by the Commissioner and rules and regulations. That grant of authority has been made by the Legislature to the Commissioner in KSA 40-225. If you're really jazzing for the information, I provided footnotes at the bottom of the brief. And the bill would become effective upon publication in the statute book, Mr. Chair, and with that, I can stand for questions.
Thank you, Reviser. Are there questions, committee? Representative Neighbor.
Thank you, Mr. Chairman. For educational purposes of this body, can you tell us the definition of what looks like it's misspelled? Site used?
Citist?
Yes, citist.
Great. Actually, I was asked this question. So
I know. I asked you years ago, too.
Citist is where, in this instance, a corporation has filed its papers of incorporation. So it's an American corporation is citist in the United States of America. A Canadian corporation is citist in Canada. It's where it's where it's been incorporated citizenship, per se.
I have one more quick question, too. As you were going through your description here, you referred to House Bill 2510, but it says Senate Bill 336 in 2 places. Did you mean, should that be corrected or should it?
Yes, this is my bad. Their great and impressive wisdom, when a chair requests that a bill be introduced in both the House and the Senate, the reviser uses a cheat and copies the bill brief, and sometimes in rushing, the reviser misses updating all the bill references. So Senate Bill 336 is actually House Bill 2510, and I'll make that correction.
So those 2 places should be corrected.
It's actually 3, but I won't point out the last one.
I'll try to find it for you. Thank you very much.
Other questions? Representative Riley?
So, and this sounds to me like this might be a question of another representative that has longer history on this. But at what point did we decide that we were going to do investment, or that these companies would do investments in Canada? There was a time in our history 20 years ago, the Canadian dollar was pretty solid against the American dollar. That's not as true as it used to be. And so is there some history there why we still incorporate investments in Canada?
Actually, I believe that would be a better question put to the conferee, but even as far as the 80s, when I was in college, we would jump over to Canada to go shopping because the dollar was stronger over there. So, yeah, I can go back and look to the last time, or actually the first when the statute was enacted, and let you know that date. But as for the legislative intent behind it, I can't give you that answer
So there wouldn't be any
without some research.
possibility of maybe making some amendment to that. I'd like to hear from the people that are involved in this, whether or not there's some possibility of limiting the amount of those investments in Canada. So just passing that as a discussion question.
Well, again, the conferee could probably address that information better.
Further questions, committee? Representative Dodson.
Yeah, the second to last sentence on the first page there, section 2. SB 336, increase the raise the admitted assets. I'm not quite sure I understand what that is.
Yeah, English is my first language, but you couldn't tell from that sentence. It increases the rate or the amount. It raises the amount of admitted assets, the amount of, excuse me, it increases the limit, the admitted asset investment limitation from 15 to 20%. I clearly need to fix that sentence too.
The other one is, and it may not be an appropriate question at this time, but when we make investments, we have a certain amount, depending on your tolerance for risk, for equities, for bonds, for land, et cetera. And we also have inside equities. You normally have equities in U.S. and equities overseas. And does this impact any of that? I mean, or is it just meant to limit equities for U.S. and Canada investment?
This only affects the investments for the investments that are made by the life insurance company in U.S. and Canada investments. But anything further than that, I would not be able to speak to because that's further than the scope of this bill.
The investment committee, I assume.
So, and I think our conferee may be able to clear up some of that, and whether this is referring specifically to those that are domiciled in that area. I'm going to guess that the stock investments could actually be broader than U.S. and Canada if we were looking at international stocks, but that may be within or not only in the preferred stocks, but other areas that they invest in, and we'll look forward to some more clarity on that.
Thank you.
So, other questions for the reviser? Seeing none at the moment, thank you for the overview. And there is no fiscal note for us here, so we will move to our proponent testimony and welcome Chris Swickard to the committee from Security Benefit, and we'll appreciate the information you had and perhaps even some information on the questions that we had for the reviser. Welcome to committee.
Thank you. Good afternoon. Mr. Chairman, members of the committee, thank you for the opportunity to be here today. My name is Chris Swickard. I'm Vice President and Associate General Counsel of Security Benefit Life Insurance Company, and I'm here to testify in favor of House Bill 2510. If approved, this bill will modernize Kansas statutes that govern the investment by life insurance companies in preferred stock and equity interests, and in doing so will help Kansas insurers grow their businesses, serve their customers, and compete more effectively with insurers from other states. I'll start off by outlining what the current statutes, KSA 42B06 and KSA 42B07, currently allow with respect to preferred stock and equity interests, and then discuss how the bill would amend those statutes. KSA 42B06 allows Kansas life insurance companies to invest up to 25% of their admitted assets in preferred stock, but only if a lengthy list of conditions are met. And those are set forth in detail in Appendix A of my testimony. I'll address some of them briefly here to give you a flavor of them. One, obligations of the issuer must be investment grade or satisfy other tests set forth in the statute. The issuer must not be in arrears on dividends or must have paid full dividends over the last 3 years, depending on the type of preferred stock issued. The issuer's net earnings to fixed charge ratio must be at least 1.25 times for the most recently completed 3 years. And the issuer must have been in existence for at least 5 years. KSA 42B07 allows Kansas life insurance companies to invest up to 15% of their admitted assets in equity securities, separated into 2 different categories or buckets, if you will. The first category being 7.5% of admitted assets are permitted to be invested in unlisted equities or equities, listed equities that don't satisfy the criteria set forth in the statute. The second category is 7.5% of admitted assets in listed equities, but like with the preferred statute, only if a lengthy list of additional requirements are met, which again are set out in detail in Appendix A of my testimony, and I'll address a few of them here briefly. Obligations of the issuer must be investment grade or satisfy other tests in the statute. The issuer must have paid cash dividends for each of the last 3 years and had earnings in 3 of the last 5 years prior to the date of the investment, unless the issuer satisfies certain net assets, net worth, and aggregate market value tests. The insurance company can invest no more than 2% of its admitted assets in any one issuer and can purchase no more than 5% of the outstanding shares of any one issuer. We believe these existing statutes, their limitations, restrictions, and requirements are outdated, cumbersome, and overly restrictive and difficult to use at a time when yields on investment grade and high yield debt securities are at all-time lows. When we compare the Kansas preferred and equity interest statute to a number of other states, including states with more life insurance companies domiciled in it than Kansas, what we find is on the whole, their statutes are more flexible and allow a greater percentage of an insurer's assets to be invested in preferred stock and equity interests than does the Kansas statute. And again, Appendix A contains some details on that point. The bill before you would amend KSA 42B06 to allow Kansas life insurance companies to invest up to 25% of their admitted assets in preferred stock, so no increase over the existing statute. It would stay at 25%. But it would do away with the additional requirements that are currently set forth in the statute and that we summarized just a moment ago. The bill would also amend KSA 42B07 to allow Kansas life insurance companies to invest up to 20% of their admitted assets in equity securities, so a small increase over the existing statute's 15%. We would get rid of most of the additional requirements that are set forth in the statute and that we addressed just a moment ago. It would, however, keep the requirement that no more than 2% of an insurer's admitted assets be invested in any one issuer. We believe the revised statutes, if adopted, would provide Kansas life insurance companies a more current construct with appropriate guardrails, permit Kansas life insurance companies to more readily adapt their investment portfolios to market changes as needed, allow Kansas life insurance companies to grow their businesses, serve their customers, and compete more effectively against companies located in states with less restrictive preferred stock and equity interest statutes. States such as Oklahoma, New York, Louisiana, Connecticut, Michigan, Pennsylvania, and Texas. Again, Appendix A contains some of the details on comparisons between the statutes in our state and the states mentioned. It should be noted that the amendments in no way dilute or change the responsibility of the Kansas Insurance Department to supervise Kansas domiciled insurance companies, including their investment activity. Security Benefit has discussed the proposed bill with the department, and they have no objection to it. And in fact, we're not aware of any opposition to the bill before you. Thank you for the opportunity to be here today. I respectfully request passage of the bill. I'd be happy to address any questions, and it sounds like I'm going to get a number of them.
Thank you. Thank you for being with committee, and I know that you'll be able to add color to that. I think we will step into those questions. At some point, we might have you walk through the appendices also, as I think there's some useful information to help us with that. But we might start the questions that were asked regarding the domiciled in Canada and how that affects, and are we only looking at U.S. and Canadian? Is there U.S.? What's the international perspective or percentages? If you have some thoughts on that to share with a couple of questions, and then we'll allow them to follow up, would be great.
Sure. So the statute to KSA 42B07, the one that addresses equity interests, and I'm not sure if it uses the same language in 2B06 or not, but with respect to Canada, I guess one of the things I would say is it's permissive, it's not required. You don't have to invest in Canadian corporations. It just gives you the flexibility to there. And effectively, it's putting Canadian corporations sort of on the same playing field as U.S. companies on the basis of things like, following accounting standards that are similar to the United States and having a regulatory structure that is similar to the United States and being a stable government. So, it's not to say that just because there's the ability to invest in Canadian corporations that a company is going to do that. We're going to evaluate investments regardless of where they're domiciled based on their fundamentals. And then the question about international, these two particular statutes don't address international investing. There's a separate statute in the investment statutes that govern investment by life insurance companies that address investing internationally. And that statute, as the revisor noted, is not being amended. So the existing limits relative to international investments will stay in place and will not be affected by this.
So thank you. And then to you and/or the revisor, the 25% reference in the memorandum from the revisor that had the reference to the Dominion of Canada, that is not being changed. And the 25% is consistent, and the wording in current law happens to define that set. The change then that you are seeking as we get to the equity piece in the next paragraph of the revisers, where we would go from 15 to 20%.
That's right.
And in this section, we would seek some relief from the burdensome requirements. It's 25%. Jump through these hoops, you get there, but can we get there more neatly? Okay.
Yes.
Thank you. And to the representatives with the questions, I didn't mean to take those away. I would look if there's some clarification that you would like further or any other questions for our conferee. Representative Miller.
Mr. Chairman, your appendices labeled Kansas, that's current law?
Yes.
Could we get a side-by-side with the proposal? Not all these things are being changed, but some of them are under the bill.
That is correct. Yeah, we could work on an additional comparison.
Because the appendix is really good. Mm-hmm. Yeah, if we had that side by side, that would let us hone in on exactly what's being requested.
And I can walk you through
To do that.
that basically. So if you look at the appendix dealing with preferred stock, KSA 42B06, right? And so what we've got on the left hand is Kansas, and as you noted, the answers down that column are based on current statute. So the first one, limit on percent of admitted assets that can be invested in the preferred stock of any one issuer. Kansas currently doesn't have a limit in that regard. nor does Oklahoma, New York, et cetera. Connecticut has one, Louisiana has one, Pennsylvania has one. So that in the Kansas statute would not change. There's no limit right now on investments in any one issuer.
Can you just walk me down the ones that are changes?
Okay. So the ones that would be changed would be the next one, obligations of the issuer must be investment grade. So that would come out of the existing statute. Issuer must not be in arrears on dividends. That would come out of the statute. Sinking fund payments are on a current basis. That would come out of the statute. Issuer's net earnings to fixed charge ratio, that would come out. Issuer must have been in existence for at least 5 years, that would come out. And then if you turn to the chart for KSA 42B07, the percentage of assets that could be invested in equities, as the chair noted, would be increased from 15 to 20%. And then the requirement that the issuer be registered on a national securities exchange, that would be removed from the statute. Obligations of the issuer must be investment grade, that would come out. Issuer must have paid cash dividends for each of the 3 years prior to the date of the investment, that would come out. Earnings for 3 of the last 5 years, that would come out. Then down below, there's 2 things referenced in that section. The 5% of equity interest in any one issuer, that would come out. But the next one, 2% of admitted assets in any one issuer, that would stay in.
And one final question on the charts, and pardon me if you already said this, but why these selected states?
They are, there's a fair amount of variety in what states permit their insurance companies to invest in. In the insurance space, in some statutes, there's a great deal of uniformity, in others, there's not that much. Basically what we were looking for were states where we had a lot of competitors and, what their investment statute said, so we can compare ourselves to them. So, there's a fair number of our competitors that are domiciled in New York, Pennsylvania, Connecticut, Texas. Started looking at those and, noticed that they had more flexibility than was offered under the Kansas statutes.
And one last question, if I may.
Sure.
Is it true that Security Benefit is one of the oldest and finest companies in the country?
There is, without equivocation, that is an accurate statement.
Thank you. As a Topekan, I had to ask that.
In fact, next month we will celebrate 130 years here in Topeka.
Representative Neighbor.
Thank you, Mr. Chairman. If I were to look down this list with the equity interests, the first thing I would see is you are increasing the amount, but you're taking away most of the safeguards or what would be perceived as safeguards. How do you answer that?
Sure. It's a good question. I would answer it in a number of ways. First, I would point to the states who do not have those requirements, and those are the ones listed in the appendix, including the state of New York, which has probably more insurance companies domiciled in it than any other state in the union. And they've not had any issues with the statute in New York, which is basically what we're asking for. It's the same type of thing. The other thing I would say is that equity interests in general are obviously they're more risky than fixed income instruments, but risk is really a function of time. And the so if you need your money in, a month, 3 months, 6 months, 12 months, investing in equities is, not a good idea. If you need your money in 10 years, 11 years, 12 years, 13 years, then they become much less risky because over time, equities, have shown that they have very good returns. And the thing with life insurance companies, particularly those that issue annuity contracts, where the idea is you're buying this annuity and you're getting a payment for your lifetime, they have very long liability profiles. So we don't need our money in 3 months or 6 months. We need it in 9 years or 10 years or 11 years.
Thank you, Mr. Chairman.
Representative Proctor.
Thank you, Mr. Chair, and thank you, sir, for your testimony today. You know your industry a lot better than I do, and this is almost certainly an unfair question, but I'm going to ask because I do that a lot. How much mobility or growth is there in this industry? And what I mean is, if we change these statutes, can we anticipate that any companies might actually relocate to Kansas or start in Kansas that aren't currently in business? Like I said, it's an unfair question.
Yeah. It's a fair question. The way I would respond to it is, obviously no one can say that it's going to, attract people to re-domicile here or start, a company here. But I would say it's certainly not going to hurt. It will also, I think, help to keep Kansas companies here. It's a competitive marketplace, and so as people are shopping for forums, I would say, anything that we can do to make Kansas more attractive to them, as opposed to, Texas or Connecticut or places like that, is a worthwhile thing to do.
Thank you, Mr. Chair. One more question. The examples you've shown are kind of the states that are doing it a little better than us from your perspective. How many states are worse places to have? You've shown kind of the examples of this is where we want to go.
Right.
What states are out there that are doing it worse, or how many?
It's a hard one to answer. We didn't do an exhaustive search of every state in the union. I'm trying to think if a state in particular comes to mind.
Would it put us in a percentile? Would we be in the top half, bottom half?
Currently?
If we implement this.
Oh, if we implement.
I guess both, currently and if we implement this.
Right. I would say currently we are probably in the sort of the middle of the pack. Not great, but not horrible. We've obviously been able to manage in Kansas for 130 years, and we're doing great.
Tread
so
water.
that's fine. With these, I would say, that we're certainly going to move ourselves up quite a bit.
Okay. Thank you, Mr. Chair. I appreciate it.
Thank you for the question. Representative Dodson and then Collins.
Thanks, Mr. Chair. Two questions, one to follow on with Representative Proctor. Would you characterize this risk profile that you have as being conservative?
Could you elaborate a bit? Are you talking about?
When you're constructing a portfolio, you have equities and bonds and land and so on. So when you look at the way that we've constructed these kind of requirements, and we don't have international in here, but when you look at all that, how would you characterize the investment strategy?
The strategy of security benefit, or what the statutes permit?
What the statutes permit, and then I'll ask the question that maybe gets at that too.
Okay. I would say that they are, on the whole, still conservative. For example, in the preferred stock statute, there's no increase in the overall percentage. I think it's it's a debatable point as to whether or not those additional requirements really provide any additional safety or not. I'll give you one example, and this applies to both the preferred stock statute and the equity interest statute, because they both have a requirement that the issuer be rated investment grade. Give you one example, and I'm not saying that this is a good stock or a bad stock, but it's really just to illustrate the point, which is, currently a stock like Tesla could not be held under either statute because they're not investment grade. So on the whole, I would say that the investment statutes in Kansas still require overall a conservative investment portfolio.
The other question is something that just occurred to me as you were talking, and that is a lot of the insurance companies are national or international. And I'm trying to figure out how each state placing guidelines or restrictions on their investment strategies can be orchestrated at the corporate level. In other words, corporations I've been with make one investment strategy. They don't strategize for each state.
That's right. And so the investment statutes apply to insurers domiciled in that state. And so by and large, there are some states that do require that you, there's only one state that I can think of that does this, it's New York, that does require every admitted company. So if you have a license in the state, you have to comply with their investment statutes. Otherwise, across the U.S., the investment statutes apply only to companies domiciled in that state. So we only are required to follow Kansas investment statutes.
We're only domiciled here.
We're not licensed in New York.
Thank you very much. Thanks, Mr. Chair.
Representative Collins.
Thank you, Mr. Chair. And kind of to elaborate on Representative Proctor, the other states that you mentioned, Oklahoma's there, which is a neighboring state to us, and Texas is relatively close. I was just wondering if you had any idea how we compare to our other neighboring states. Like Missouri, I could see a possibility of a company wanting to domicile, between Kansas and Missouri, trying to decide which one. I could see that happening. So I was wondering about neighboring states and particularly Missouri.
On the whole, I would say that, Missouri's statutes are, in terms of investment statutes, are, fairly similar to Kansas. We haven't done an exhaustive, statute by statute comparison to Missouri, but my familiarity with them over the years, I would say they're relatively similar to Kansas.
All right. Thank you, and thank you, Mr. Chair.
Thank you. Other questions, committee? Representative Topliker.
Thank you, Mr. Chairman. My question is, these two statutes were written with limitations for a reason, for safeguards, right? And in looking at those, I noticed that they went into law in 1972. It changed a little bit in the mid-'80s and mid-'90s, and then the 2B07 was changed in 14. And so they're safeguards, right? That's what this was all set up for.
Yeah.
And so you're saying that, well, you've been around 130 years. I mean,
The company has, I haven't. I know I kind of look it, but.
at some point, you have supported these. At some point in Kansas law, you've supported these changes. And and I'm just going to guess, you've probably were in favor of some of these changes over the years in Kansas law?
We may have proposed them, yes.
And so, but now you think it would be better to wipe out these limitations?
In a word.
I mean, I'm just
No, in a word, yes.
saying bottom line.
Yeah, no, yes.
Okay.
And I would say that, things change over time. When they do and we need to make changes, that's the path we go down. And I would say that, it's also, and, obviously interest rates are probably going to be changing here over the next 18 months or so, but we've been facing an interest rate environment for the last how many ever years, that's been very low. And in that environment, looking for other asset classes to invest in, has caused us to look at these in more detail than we had previously.
So you are in favor of this because you think that it would help earnings, it would help the companies, and you've told us all the pros. Any cons? I mean, obviously, when you're a proponent of a bill, you're not going to sit up there and, say much negative if you want.
Yeah. Just trying to think through if I was.
So nobody's going to come crashing down if we take these safeguards away.
Well, I'm not going to give you a guarantee, obviously, but no. I mean, we believe that if that were the case, then New York and Texas and Pennsylvania and Michigan would be having problems with their insurers, and they're not. They've had statutes that are the model for what we're trying to go to for many, many years, and have not had issues. I mean, the other thing that people need to remember with respect to investing in equity securities, at least from an insurance company standpoint, is that when you're required to hold capital against all of your investments. And the amount of capital that you are required to hold against an investment is based on its risk, and that's where we come up with the risk-based capital ratio. It's one of the statutes that's going to be addressed here later in the session. But so for equity securities, you have to hold a significantly more capital against those than you do investment-grade debt securities, for example. And so against an investment-grade debt security, you might have to hold 3% capital. Against an equity security, you might have to hold 30%, 40% capital. So even though it is more risky, you're holding more capital against it, so it's costing you more, you're having to hold more capital against it. But that is one of the safeguards.
Because I'm just trying to get to some bottom line bullet points here. So because of market changes, conditions, that you think this will help the industry?
We do, without doubt. Yeah.
Thank you.
I have Representatives Miller and Proctor have a second turn that I do want to get to, and I'm going to take just a moment and inject a few of my own, and I'll come right back to you because I appreciated the questions you asked the first time. Representative Meyer, did you have a question? Oh, I would recognize Representative Meyer for the first time. Yeah.
Thank you, Mr. Chair. Thank you. I just had a couple questions, and please forgive my naivete. This is my first time on the committee, so, and this kind of is sending my head spinning. But, a few of my questions were really about who this is designed to benefit. So my first question is, are these changes designed to benefit the life insurance companies and their profits or bottom line, or more so designed to benefit the end consumer or the policyholder?
In my mind, you can't separate them.
And can you
Because-
explain that a little bit?
Yeah, absolutely. Because if the insurance company is not making profits and is not a well-run, profitable company, there'll be no customers to service. And I would also say that having greater profits allows us to provide more benefits in the policies that we sell. I'll take an example would be, we sell, among the products that we sell are fixed annuities, where we provide a stated credited rate to your contract. So you buy the contract, you're going to hold it for, make it up, 5 years, and this is the interest rate we're going to pay. The more that we're able to make, the more that we're able to credit on contracts like that. So I don't see it as an either or. I think it benefits both.
With that said, are there still additional safeguards in place to protect the policyholders if these investments take a downturn of some sort?
Absolutely. And the one thing you need to remember is that when a life insurance company, unless you're talking about variable products, which we'll leave those aside for a moment, but when a life insurance company invests through what we refer to as its general account, that's for its own risk. And so we have guarantees that we've made to policyholders. So if you bought that fixed annuity and we've said we're going to credit interest to you in this amount on this contract, and we lose money on an equity investment, that has no impact to you. We've guaranteed it. We've got surplus that we're required to hold by statute backing those obligations. We're regulated by the Kansas Insurance Department. They regularly examine us. They're in on an examination right now. So it's not, in that regard, it's not a risk to the policyholders. It's the company's risk that is on the line.
Thank you, Mr. Chair and Mr. Speaker.
Are there other first-time questions? Seeing that, I will move on, and I'll come back to myself. Representative Miller and then Proctor.
Mr. Swickard, you provided me some information before the session started, and you listed a number of companies that you are currently limited. Today you mentioned Tesla, but would you share with the committee some of the nature of some of those other companies so they can get a better feel for what you can't do under these laws?
I wish I could, because I'm trying to remember now the list I shared with you.
Or if you could just provide it to the secretary and
Sure.
the committee. Don't have to do it right now.
Okay, no, I'd be happy to. And I was thinking about that this afternoon, but we're back working at home again, and the list was at the office, and it was.
I think it would be helpful for your cause.
Okay, yeah.
Representative Proctor.
Thank you, Mr. Chair. I just wanted to thank the conferee because after a year in this committee, somebody's finally explained risk-based capital to me in a way I understand. So thank you, Mr. Chair.
I know it's a bill you guys deal with every year, and so.
So thanks for the questions as they continue to come up. This is our chance to get our arms around this one, and it's a big deal for us, for the state, and for the opportunities for security benefits. So appreciated the questions on the states and how they were chosen and where we fit. I think that was very instructive. Any reason why we had slightly different states between the equities and the preferred stocks and how you made those selections?
Like I mentioned previously, in part we were looking at states where we had competitors, and that wasn't the be-all end-all, but that was one of the criteria that we looked at. And then beyond that, we were also just looking to see, okay, if we're going to come over here and ask for something, right? Is there some precedence for it, or are we asking you to go out on a limb and there ain't nobody else out there but you? And so we came across these companies as examples, and really just as a way of saying, no, you're not you're not out there on your own. And not only that, the states that have done things like this have a large number of life insurance companies in them. New York, Connecticut, Pennsylvania, Texas, right? A lot of insurance companies are. And so therefore, is it a reasonable thing to ask the legislature to do? And in our view, yes.
So thank you, and I do agree with that, but in addition, with the states, are there some, so this group looks fairly similar to where we might be. Are there some that are even higher than these numbers that are not here? Not that you have to have an exhaustive list of every state.
I would say probably not. I mean, could we find some, probably. For example, I think, is Michigan in my list? Yeah, on the equity. For example, they have no limit on equities. You can invest the entire general account in equity and equity securities.
And then both.
Texas, for example, lets you go up to 25%.
So obviously, the no-limit states would be at the high end.
Yes.
Yeah, hard to get past 100%. Then to Representative Proctor's question on where we were on the portfolio, and you may have addressed this also, on the bureaucratic hurdles, are we kind of unusual for having some of those in our statutes, or is that fairly common? Clearly, the other states didn't seem to have those that we saw. Are we in the bottom quartile on the?
Yeah, I couldn't put us in a quartile range. I will certainly say that, you can certainly find statutes similar to 2B06 and 2B07 in other states.
Okay. So thank you. I like the quartile frame that was given. So anyway, appreciate that. Just in general, as we try to get our arms around this one, it's a challenge, and each company is different in the portfolio that they have to manage, with security benefit having maybe a higher percentage in annuity type of investments than maybe a Blue Cross that would be looking at health type risks. Yep. That affects time frame, affects how you're managing the risk, and it's to the good question, all in for the policyholder, for the company shareholder. Everyone has to win on that, and as you look to that trade-off, if I have a longer time on some of my annuity contracts, which may be out beyond that 10-year time frame, yep, and risk is reduced with time, might I actually have a lower risk general fund for two reasons. One, the diversification and the impact of that time on a standard piece, reducing the variance of the total portfolio, as well as the current time, looking at the interest rate risk where we are in the current environment.
Certainly, potentially. I mean, because risk kind of runs both ways, right? I mean, on the one hand, there's the risk of loss, and that's what people tend to focus on when they're thinking about equity securities. But the other risk is that when you get to that end of that liability profile, and you see this probably in some respects in the KPERS arrangements, you don't have enough money to fund all your obligations. And so if you had a portfolio that was more exposed to equity and you had a longer time period, you arguably have a better chance of, when you get to that spot, that you have enough money to fund all your obligations and keep the business running and employ people and service your customers.
So thank you, and that's an important one to get a handle on, and by changing our constraints. We're not suggesting that all companies would go there, but would have the opportunity to go there if it was prudent for their risk management, given the portfolio and the fact that there's some variance between what those could look like.
That's right. And then the other thing I'd say is that, the risk-based capital is a bit of an equalizer, because regardless of whether you're in health insurance or you're writing life insurance or you're writing annuities, everybody's subject to the risk-based capital requirements. And so to the extent that you invest in equities, you're going to have to put up much more capital against those investments.
So, and then to the question, it'd be great to attract more companies here, but it would even be good to just attract more business. And what I had found in time when we could increase the return on our general fund, that increased what we could pay to customers on various annuity products, and that then drove more sales for the companies that were here when those opportunities existed.
Agree.
So that one, and then as you get a handle on risk and return, if you can get to 4 years, your standard deviation is cut in half. For a portfolio, or for an investment. So if I have a stock that I expect 8% on with a variance of 10 or 12, over 4 years I cut that variance to 5 or 6. And when I put 5 or 6 on a plus or minus around 8, my downside starts to look a lot more attractive if I've only got a bond at 2.5 or 3 and a variance of 4. And that's what they're going to have to be looking at as they work through it. And then it gets even more exciting as you go further out in time. But I wanted to just point out a little of that and see if it generated any questions or anything that you wanted to ask a real expert versus a has-been in the industry on how to handle the risk return and the change that we'd be looking at, knowing we wanted to keep everything safe for investors and companies in the state. So any further questions? Representative Bourgeon.
Thank you, Mr. Chairman, and congratulations on 130 years as one of the other state reps from Topeka. We're glad you're here, and we're glad you're doing business in Topeka. So I was just wondering, as I listen to this, I'm trying to get a handle on if there are other businesses that would, if this passes, that would take advantage of this as well.
Any Kansas domiciled life insurance company could. There's not a tremendous number of them. Blue Cross is, even though they write health, they're a quote, life insurance company. So they could. And there are a number of, a number of other smaller life insurance companies. Whether they would be interested in availing themselves of this, I'm not certain. To Representative Johnson's point, going to depend on their own management and their own risk profile and, what they're seeking to do with their business.
Further questions? Everyone ready to carry this on the floor? Here's your chance. So I just wanted to make sure we had that chance. One of the other questions that I would direct to either the Comparee or to the insurance department representative in the room, I know the first place that you went was to the Department of Insurance to talk about that. I understand they are fully aware of that, their role in terms of oversight, the seriousness of that role, and understand that I believe, I don't mean to put any words in their mouth, but if you have some comments to that, and then Mr. Modisett, if you would just give a brief update for the committee for us to know all the work that was done before we got here.
So yeah, I as I'd mentioned in my testimony, nothing in this changes the responsibility that the department has to supervise Kansas domiciled insurers, including their investment activity. They periodically examine us, and as noted, they're in on an examination. Right now, we file quarterly financial statements with the insurance department. We're in contact with them, very frequently. They're doing a great job on the exam, I'll say, by the way.
Thank you, Mr. Chairman. For those who may be listening online, Lee Modisett, Kansas Insurance Department. We have met with Security Benefit, had a great dialogue with them. One thing that I think is important for folks to remember is the way I try to look at this is a new ceiling, but it doesn't change our responsibility or oversight. At the department, we're still going to do comprehensive financial analysis. So while the statute may permit up to this amount, it's not a guarantee, it's not an automatic. We still have to go through and do our financial surveillance division does comprehensive analysis to make sure that ultimately the companies domiciled here are solvent. That's important both from a policyholder standpoint and also to this kind of whole framework of state-based regulation of insurance. And we take that responsibility serious, and that's part of that accreditation process the Commissioner talked about earlier when she was here. NAIC looks at how well do we do that piece of our responsibility.
Thank you. Committee, any other questions? Seeing none, thank you for our conferee and the engagement of the committee. Appreciate both of those.
Thank you so much. We really appreciate your support. Thank you.
Thank you. Is there anyone else wishing to appear as a proponent on House Bill 2510? I have none listed and have no other testimony that is listed. Is there anyone wishing to appear as an opponent on House Bill 2510? Anyone neutral? And anyone at all? And hearing none, we will close the hearing. Thanks to everyone for their attention to that matter. So that takes us through our business for today, committee. As we go to next week, on Monday, I would plan on voting on the two bills that we have heard. In addition, there's a couple of bills, including those read in today, dealing with risk-based capital, which we can now debate in a robust manner on the date change. But we may add some of those bills into the hearing schedule that we have. And one other thing I would ask the committee's readiness on. So we started to look at what general funds look like and how we might regulate those. Another issue that is before us deals with the TEFI and changing not only from what we're looking at now, but looking at an insurer and the ability to have an in-kind investment. If you got your head wrapped around this real well, I'm still struggling with that one. We could go ahead and hear that. It is in our committee. The Senate is hearing theirs now. If you're ready to jump into that while we're kind of on the topic and before we get swamped with a lot of other things, we can do that. I don't know if there's a concern, do we want to give some time for folks to see how the Senate bill comes up in case there are opponents that we want to come up? I'd welcome your guidance in whether we add that in to what we're grappling with next week. So just wanted to throw out a couple of things that are there on the insurance topics for us. Anything else like Representative Smith had earlier that you'd like for the good of the committee? Seeing none, thank you. We're adjourned. I'll see you Monday.